Good evening, everyone. Welcome to your Wednesday update. I'm Ads from UTG. Before we start, hit that like button, subscribe to the channel if you can, and of course, tick the little bell if you want to stay updated on all of our future content. Content coming soon. I finalized our gravy train video, so that should be coming extremely soon as well. So keen to bring that all to you over the next couple of days. It'll be the next couple of days. We are heading into the weekend now, so maybe first thing fresh Monday morning. We'll see how we go. BTC though. BTC. Couple of things occurred today, and we've been speaking about it over the last couple of days with this. I'm going to keep it a little bit more casual, a little bit more of a slower pace this evening. I just want to give some more explanations and give you my thoughts on the market and the sentiment and everything like that. So, BTC 178. That's the level that we're really looking towards over the last couple of days. What happened? So, I think it was Monday night we were speaking about this price action here. What we said was, or what I said was, we were looking for one or two things. We would eventuate and come down to our 45,500 level of demand, which didn't come to fruition, of course. The second option was push back up above this trend line, retest that level at the 1618 and continue up to the 178. And that was the theme last night, pretty much. That was a scenario on Monday. It was the theme on Tuesday, and it came to fruition today. And eventually we did push above it and towards that 2 area for BTC. And by the 2 on BTC, I mean a 200% Fibonacci level on our trend-based fibs. If you haven't used trend-based fibs, you can find our video in our on our YouTube channel, actually, on trend-based fibs. You don't need to scroll back very far at all to find that. Or you can do a trend-based fibs search on our channel as well. But coming back to this, yesterday I spoke about not changing your bias immediately. Keeping your bias to the macro scale. So if I put on a trending based indicator, which is, we've got a few like trend breaker, steamroller, of course, and of course gravy train, that's coming soon. But if I put a trend based indicator on there, and you can even put something as simple as, moving averages on there, to give you an idea of our direction, our overall direction, it's still to the upside. Today in the Discord, this afternoon, I did mention that I was scaling out of some of my positions to protect capital, because there was two scenarios that were going to play out today. We were either going to get a double top scenario on the 178, or we were going to push up and head towards our 200% fib extension there at the 52k mark. Those two scenarios were in front of me as I was looking at some of my trades still open this afternoon. I decided to remove some risk out of the market. So whatever I'm exposed to with BTC pairs, obviously a move to the upside will disrupt those trades. So removing that and going back into cash was the best option. And whatever trades that I had in USD, I was scaling back. So not selling the entire position completely, but just removing some capital. So I had some capital back into cash, and of course the BTC pairs were back into BTC. Coming back to my original thoughts for yesterday, we were talking about not changing the bias, and this is another thing. This is another one of those videos, because there was a lot of selling, trying to catch the top and trying to move, on a double top before it had played out, trying to move on a scenario before getting confirmation of a movement down. We had a 178 retest and we closed below it. The next candle moved to the upside. We haven't received any downwards momentum and pushing past these Fibonacci levels to really confirm our downwards or our bearish bias as of yet. So we shouldn't be jumping into any sort of leverage positions towards a downwards movement or a downwards cycle just yet until we get those confirmations in stone. Because they're going to hurt if you're wrong. And of course, that played out this evening. There's a lot of people on Facebook, on Twitter, even on YouTube, hurting at the moment because they're trying to catch the top, trying to catch that psychological round number resistance at 50K. Well, we pushed past it. And the next level that I'm looking towards is the 52K mark. If we get there or not, that's another argument entirely. We might not get there. We might just fall from here. We are observing some overbought conditions on some of our indicators. However, if we're looking at something like the RSI, we do have enough room to get to 52K. And of course, as we all know, $1,000 move on BTC is not hard. So again, I'm just going to regurgitate the same message. Wait for some confirmation before you sell the top. If it's in your trade plan to protect capital in events of volatility, like mine says, then of course you should execute your plan as you have written, but don't try and catch the top because it will mostly hurt if you're wrong. And waiting for confirmation, of course, is going to be the best option in this market. We are still bullish. If you scroll out to the 1 day time frame, we are still bullish. It is still bullish. Gravy train, bang, we are bullish. Indicators, invite only, trend breaker. If I load up trend breaker from UTG, it's in our premium pack, on the website. You can find that link down below. Once it loads up on the chart, let me just tick the boxes that we need to. So we're looking at the super trend fill, plot crosses, and higher, higher, lower, low, super trend as well. If I just look at something like this, of course, trend breaker says we are still bullish. We did have a moment of indecision here, just like Gravy Train said we did. However, we are still bullish on the most part, and we are making a higher high as we speak on the daily time frame. So my message is just don't try and catch the top, wait for some confirmation. This is uncharted territory for BTC, so we don't know where the top is. It's exactly the same scenario that we had back in 2017, 2018, where we saw the 20K top. No one knew where the 20K top would be. We had inklings of it, of course, with Fibonacci's and everything like that. However, we didn't know for sure that was going to be the top. We have inklings of 52K being the top. We have inklings of 62K being the top. However, we don't know for sure. Anyway, moving on. The BTC dominance chart. BTC dominance is something that we've been looking at for quite some time now, and it's proven very important over the last 7 days or even the last 2 weeks, as we have seen this bounce off our level of demand and push up past these Fibonacci retracement levels, currently sitting on the 61.8, which is the most important level on the Fibonacci area. So if we do push past this, the 78.6, the 88 and the 100 is next in line, and then we've got the 65% level of supply up the top next in line too. So, this evening and tomorrow is going to be crucial for the dominance chart. It's going to be crucial for BTC. If we do see a tear back into, or some volume, that's probably a better term. If we do see some volume come back into BTC, push the market dominance up, we can see it run all the way at least to the 88.6, which would coincide very nicely with a short-term level of supply there at around 64.5. You do need to keep this on your radar. That's all I'm going to say at the moment for the BTC dominance chart. Moving on, Ethereum USD, not doing much and still in the same sort of trading range as we have seen it in the last couple of days, between this supply here at 1850 and our 38.2 level of fibs. We are closed above the 23.6, after getting some trouble there over the last couple of candles. So it's going to be a good one to see if Ethereum can hold above this 23 and of course come back up to this level of supply. Next one, ADA USD is one that I've been trading. Of course, as you all probably are aware, I did take a position here at 70 cents, back down to our level of demand. That's why I've got a lot of the alerts set currently. I did remove some risk or take some risk off the table, like I said earlier in the video. ADA was one of them. So I did take a portion of profits as we did move back up to the, the 23.38 fib marks. Of course, I've taken that position off the table now, pending what we do with BTC. And I do suggest that if you don't have a plan for volatility in your trade plan, of course, you should probably look at adding that to your trade plan, because it will protect you in, extreme volatility events that we've seen on crypto in the past. So anyway, moving on. Next one we'll have a look at is XRP USD. XRP USD, we did have a bounce off the 61. So we did draw in our fib retracement from swing, I believe it was swing low to swing high. Yes, it was. So we did move back down towards our 61.8. And of course we have, moved above this 50 now. The volume's not going to be fantastic in comparison to something like BTC, but we are, keeping towards the same trajectory. It is pulling some of the altcoins up with it, although not as much as we would like for XRP in particular. So I would be looking for a 23 retest if we do come above the 38, and a market decision will be based off that. Looking at this liquidity to the left-hand side, it is quite extensive, so we'll be looking to break above that and close confidently above that before we suggest it will be running back up to 64 cents. Now, the last one I'll look at this evening is the US dollar currency index. It is a regulated market. It is not financial advice, just ideas and opinions of Team UTG. The DXY has done exactly what we anticipated it to do. So there was two levels that we were looking at, 90.2 and 90.0. We did observe this movement towards our level of demand, and we fell short, unfortunately, of the bottom one. But in any case, we are at relevant levels of demand, so a movement to the upside is on the cards. That's what we saw occur with the DXY, pushing above the 23 and now sitting above the 38. If we are to continue this run, then I'd be looking for the next level of supply, which sits only very small around the 50 area of fibs. We see some liquidity to the left-hand side that you can see running across that point. That would be a area to look for a rejection if we're going to see that total bearish trend on the DXY continue. So I'd be looking towards that level for the next move over the course of this evening. But anyway, thank you for joining me tonight. I'm Ads from UTG. Everyone stay safe out there, and I'll see you tomorrow night. Bye for now.